Good morning, everybody. It's Jeff Curran here, one of the directors and founders at Energy Live News, and I'm joined today by Jamie Shaw of Shawton Energy, and it should have been Ben, but actually Miles Thomas of Ampere has very kindly decided to drop in and help us out. I think Ben's wife's expecting a baby pretty soon, if I remember right.
She is indeed, yeah, a little baby boy.
Which is marvelous news. We love to hear that. And actually, and we're talking about solar and why, fully funded solar is the easiest way to do on-site energy. And I've actually got some sun outside my house, so this is it feels like a very relevant topic. Just some housekeeping. Yeah. All right. Okay. I know I'm going to have trouble on this webinar. I knew I was going to have trouble. I thought it was going to be from Jamie, but now it's from Miles. It's even better. So I think we're going to have a very lively conversation today. We're going to have a good dive into solar energy, why you should be doing it for yourself, why fully funded is a good way to go. We're going to do a bit of warts and all. So I'm not going to do that. It's going to be Jamie and Miles. They're the experts. Some housekeeping, which is please feel free to ask questions as we go along. I'm sure the chaps will answer it as we go along. Please rate us at the end of the webinar, and I'll probably tell you that about again. We do have some slides to go through, but as I said, it's going to be very much a conversation. And the lovely Jamie Shaw is also going to be appearing at the Big Zero show. So if you're not aware of that, the Big Zero show is all about how to progress your net zero journey. It's on March 24th. It's in London at the Chicago Booth London Conference Centre. And if you go to bigzeroshow.com, feel free to register. It's free for energy end users to register. So please take that opportunity if you if you've got the time on March the 24th. Let's move on. I'm going to pass you over to Jamie and Miles, and they can do their own intros. We do actually have some slides, so let's bring those up. And as I said, why fully funded solar is the easiest route to on-site energy. We've already gone through that. Let me pass you over to Jamie and to Miles. Chaps, why don't you take us through yourselves?
Thanks, Jeff. That was a big introduction to the world.
It was a big introduction, mate. And look, I know that you're trouble, so now I'm taking that opportunity.
I thought your autograph. Yeah, everyone, great to see you today. As you can see on screen, I'm Jamie Shaw, founder and CEO of Shawton Energy. It's been a fantastic journey transitioning from construction. As a structural engineer, I've spent some time in the world of construction and developing projects and solutions, and we transferred our skill set into the renewable sector around 2019. Shawton Energy from there has really skyrocketed. We've taken on multiple projects with some of the largest corporates in the UK, and I'm pleased to be sat next to Miles today, who I'd like to introduce from Ampere.
Hi there, everybody. I'm Miles Thomas. I'm the Chief Commercial Officer at Ampere Distributed Energy. Really nice to meet you all. I've been in the industry for quite a bit of time, so 25 plus years, both as sort of in real estate and in energy, moving into energy and in the property crash in the mid 2000s. I just love starting and building businesses. Came into the ADE business after working for a couple of large surveying firms, so always sat really, if you like, at the intersection of real estate and energy. So where those two work together best is on-site energy. So that's why I'm here today. We're a specialist funder in behind the meter projects. So we own and operate over 50 megawatts already, with 100 megawatts contracted, which should be online by April this year. Next slide, please.
No, it'd be me. Sorry, it's my delay. My apologies. As you can tell, the organ grinders have got a really poor monkey, so I do apologise.
I always find it really important to distinguish the differences between Shawton Energy and Ampere. So on the screen from a Shawton Energy perspective is we focus primarily on the development, the establishment and development of these projects, what we can do for the customers, how we can develop the solutions to make sure that we provide, the best possible renewable solution in terms of technology, whether that's, PV, battery, any solution behind the meter. Typically, we can look at land options locally. We can look at the base load and ensure that we do a demand matched half-hourly match product. And typically from our perspective, as we go through the development journey, we need to make sure that we're flexible, we're amenable, we have that full expertise of development from a renewable point of view. And as I mentioned, we've also still got, as part of Shawton Group, an engineering business, which influences a lot of our surveys and our engineering capability to design products and solutions that are fit for purpose. And we're also able to utilize some of the more challenging, complex estates and make sure we overcome those challenges to implement sustainable solutions as well. So primarily from our side, we're developing the solutions, we're bringing them to the floor, we're speaking to end customers, and we're working alongside Ampere to make sure that those projects are able to be financed and fully funded.
And it's the underwriting piece that is so important to us. So if you like, making our job as funder much easier when we're backed up by a business of quality like Shawton. So just a brief bit about ADE, so Ampere Distributed Energy, ADE as we tend to refer to ourselves. We're based in London, and we've not been around a particularly long time, so we've been in the market now a couple of years. We raised our capital from AGP back in sort of December time 2023, launched in 2024, and since then we've been growing at an exponential rate. So I mentioned already about 100 megawatts contracted, which for a PPA specialist is a considerable number of megawatts in that sort of space of time. So we're a business which is based on sort of volume and scale. We work with a series of partners, Shawton being one of those principal partners. Sometimes we take positions in those businesses, sometimes we don't, but essentially we operate as a family to ensure that the projects that ultimately get delivered and we fund are of best quality and being developed by the best partners in the marketplace. We only specialize in behind the meter and private wire projects. So everything we do is there to deliver cheaper energy to our customers, ultimately on site, reducing the amount of energy they need to buy from the grid at more expensive prices. So
yeah, what's the relation?
Exclusively fund. Sorry, I beg your pardon, Jeff.
I know, sorry, I was breaking in there and I didn't realise. I think there's a slight delay between the two of us. So you continue, but I have got a question for you afterwards, actually.
Yeah, sure. So only one real sort of final point is in terms of sort of our scale. We've got about 300 million to deploy into this space. Where we work, yes, in the UK, but across Europe as well. So we've got an office in Munich, we've got a guy sits in Geneva, but operating in the main markets of UK, Germany, and then into sort of France, Benelux, and Iberian markets.
The question I was going to ask, and maybe this is too simple, but effectively, you're the funder, and Shawton go away and find the projects. Is that as simple as that? Is like the doers are Shawton, and you're the money people?
Exactly right. Exactly right. Yeah. I mean, we do integrate. We do integrate quite significantly. So the point being is here that there will be problems with funding projects. You know, it might be a customer's credit. It might be that their roof isn't capable immediately of taking solar. Between us, we can solve those problems. So that's us being a flexible funder, and that's Jamie being a very knowledgeable developer who has seen pretty much everything that a customer's site and business can throw at it.
Yeah, and I think just to overlay that, Jeff, is that a lot of our focus is around the turnkey delivery. We're not looking for project finance because, you know, we're ultimately here with Ampere and exclusively able to sort of fund all the projects with debt and capital already raised, as Miles just explained. But also, you know, from the very first conversation, we've got internal, technical, commercial, legal teams that will develop the projects. We've got in-house capability to be able to deploy, you know, the staff to be able to deliver the projects. You know, as Shawton Group, we've got 150 plus staff, which provides us with, you know, a lot of firepower and resource, which allows us to be flexible and turn our hand to major projects quite quickly. And I think one of the reasons to sort of hold back on where we are collectively is that our projects and some of the trusted brands and leading brands that we work with are quite recognizable now. And one of the main things, and Miles touched on the family approach, is we are not trying to be a corporate entity. We're trying to be the entity of choice. Our mobiles are always on. We're always able to try and be amenable or flexible where we can, both from a covenant point of view or an engineering principles point of view. And it's the hand and glove approach from both of us really on that point, isn't it?
It is absolutely. I mean, these brands have to trust you to deliver across significant portfolios. I mean, you only have to look at, some of these brands that we've listed on the site here, and there are many more. Iceland's a really good example. It might be worth sort of touching on some of those in a bit more detail as we go on. But these estates are of various different ages, lots of different tenures, lots of different geographies, and you have to understand and have to have experience of dealing with those types of property all the time. Both of us have. So very unusual in a funder, probably, to find that the majority of the underwriting team actually has its roots in real estate. And I think, finding an energy developer that has his roots ultimately as a structural engineer, I think is also quite unusual. So you put all of those things together along with that experience in the energy markets, and you've got a really high quality team.
Yeah, there's perceptions in terms of the brands and how those projects are developed. I mean, roof mount, ground mount, whether they be local to the estate, whether they be in a land option and a private wire. All of these brands, as we can see on screen, are who we work with regularly. We're on framework contracts and major development programs are testament to that. So Miles mentioned about Iceland. If you look at Iceland, it's a very varied estate, both high street and retail areas. They bring themselves, in terms of their own complexities and their own difficult or complex installations around, heavy traffic public realm areas, for example. But also a customer that's really driving their ESG commitments and targets to ask us collectively to move quickly, to start on site immediately, to turn projects around in a matter of days, if not weeks, depending on the size. And we're able to do that. And we work really well with their outage teams when we're connecting these projects, and we're able to get Iceland stores pretty much delivered end to end within a 3-month period from the initial inception to gaining DNO approval, which is the longest piece of the puzzle, coupled with various other complexities such as property law. And I think just to finalise the Iceland piece is that they don't own all of their estates, nor do they have the leases longer than the PPA term. But we can look at contracting arrangements that allow licenses and an arrangement with the superior landlords, which allow us to still provide a PPA term, which might be fit for purpose. And the longer the PPA term, the cheaper the price. And that's worked really well for Iceland.
And that's always
Sorry, I've got a couple of questions actually. So, and I know we've gone into looking at someone like an Iceland, but can I take it back and go from an Iceland point of view? Why did they want to do the solar? Now, obviously, they've got rooftops, etc., but there must be reasons why they went into we need to do solar. If you could discuss why they went into that, that'd be really useful. And then I have got a couple of questions that have come up that I think are pretty useful for us to pick up on. So just take it a step back, Jamie, and say, right, from an end user point of view, why are they doing this?
Yeah, I mean, look, from an energy perspective, particularly for retail and businesses such as Iceland, energy is one of the most expensive commodities of their business. And therefore, they are laser focused on how they can be more efficient, whether that be, energy monitoring systems, AIoT solutions, how they can, reduce the frozen produce from, 0 degree Fahrenheit, which is minus 18 degrees, to minus 15 degrees, for example. But one of the things that solar's delivered for Iceland is huge commercial savings. And frankly, the majority of our Iceland stores are around 50% of the cost of their retail cost of power. So the delivered cost of power to Iceland, we're around 50% on our PPA rate. And that, when you do one store, is not material in terms of their business. But when they've got 700 plus sites and they are targeting, a couple of hundred sites at the moment, then at scale, Jeff, they really start to change the dial on the bottom line.
Yeah, okay. And now I've had a question from Michael. So thank you, Michael, for sending the question in. Is there a minimum size of project for you?
Do you want me to take that? Yeah.
Yeah, so typically, yes. So we'd look really from about 100 kilowatts. As a standalone project, we probably want to see them a little bit bigger than that, truth be told. But if we're looking at a large portfolio, we would potentially go a little bit smaller than that on a site-by-site basis. So, I mean, most of these portfolios, if they're sort of 60 to 100 stores, let's say, some of those may well come under 100 kilowatts.
Okay, so it's interesting because we probably have like housing developers or housing associations. So they'll have lots of small roofs, but they might have, I don't know, 100 or 500 houses altogether where they might want to put. Is that something you would look at, or is that something that is worth doing?
It's a very interesting question. So actually quite topical for us housing associations. So the short answer is yes, we will talk to housing associations, but what we don't want to do is to take individual householder risk. So it's a very special case, and interesting, Jeff, that you've singled that out. So yes, we will talk to housing associations in short, because we've got such flexible capital, but the way that we have to contract with those housing associations is a little bit different to how you might otherwise envisage. So if we're going down to some individual houses, it's difficult. If we're looking at estates, it's more interesting if we're looking at big runs of apartment blocks and things like that, where the housing association is essentially recovering its energy through either service charge or rent, then that becomes much, much easier and something we can actually scale up commercially.
So really, it's looking at the risk profile for it. I mean, you talked about credit history as one of your risks, so it's looking at the different risk factors.
Absolutely right, and credit risk is something that we are obsessive about ultimately. So we have solutions for businesses with poorer credit. Absolutely, we do. Inevitably, their energy price is going to end up being a bit higher, because it's higher risk. We are looking for a little bit higher return in order to reflect that risk that we're taking. Because it's a sort of 20, 25, 30-year relationship with these businesses, we have to be comfortable that they're going to be around in that period of time.
Yeah, absolutely. Now, I've got a question from Ben. Thank you, Ben. Are you essentially looking for commercial customers who have on-site energy consumption that exceeds the capacity of any potential PV system installed on their site? So, i.e., I'm assuming that, it'll do maybe 20, 25%, but they're still going to be pulling some from the grid.
Yeah, no, absolutely. And thanks for the question, Ben. Look, from our perspective, PV is what we call a solar curve. So it's not going to produce the output in January through March, unless you live where Jeff is and the sun's shining on a day like today. So what we look for is we look for how much self-sufficiency can we produce out of that PV system. And you're right, Jeff, around 25, 30% is often what we can produce from an on-site PV asset that delivers power not in excess of what the requirements are at site. So we're still trying to balance the blend of the PV wants to provide into the existing customer, but not be too big such that the excess is just spilled over to grid with no commercial benefit to ourselves or to the customer. So our design team would look at all the half-hourly data requirements, and we would then provide a design on the base load of what that site is looking for, and that PV system will be designed sufficiently so that all the PV is used to approximately 80 to 85% of its own consumption.
Okay, let's move on. So basically, I'm getting from a customer point of view, they're doing this because they should get lower energy costs. They've obviously got more security of energy. They've got security of energy supply, etc. And you talked about PPAs and doing it via corporate PPAs. So I've got another question, and this may lead into some of the other slides you've got, but let's just go this. So Duncan, thank you for your question. Do corporate PPAs, virtual PPAs, avoid non-commodity? This is a great question, by the way. Do corporate PPAs, virtual PPAs, avoid non-commodity charges even though they are using the grid infrastructure? Now, that's a good question.
Yeah, and I think it's really important to note, we've got on screen here about our relationship with King's Cross and the virtual PPA that we've signed with them late last year. So the solar farm development is in South Wales. King's Cross, we're looking to try and achieve 40% of their overall power load by way of a virtual PPA. So at King's Cross, utilising the virtual PPA in the first instance as an example, Duncan, virtual PPAs are a financial settlement which do not include non-commodity. So effectively, it's the commodity cost of power at a strike price agreed between the two parties, and the non-commodity costs are then picked up by the counterparty. And that virtual PPA is not a physical PPA, it's a financial settlement. A corporate PPA, being a physical PPA or sleeved PPA, is actually a PPA where effectively the exported power is sleeved in an arrangement with an energy provider from the solar farm or the generational asset into multiple sites of the corporate. And that energy supplier will either include non-commodity or not include non-commodity, depending on the contractual mechanism of the corporate PPA. So it's into the legalities. The answer is, if you want a fully delivered price, that's absolutely something that can be achieved on a corporate PPA and a sleeve PPA, but it's not something that can be achieved on a virtual PPA, because a virtual PPA is a financial settlement and not a sleeve delivery of power.
I mean, I can see why that question was asked. I mean, non-commodity costs have gone from probably when I was first starting in the industry about 25-30% to over 50% now. So I can see why somebody would want to avoid those charges. I mean, ultimately the government may change their mind, but it is a way of being able to counteract against against non-commodity charges.
Yeah. I mean, ultimately the corporate PPA structure, be it virtual or physical, is a product which is becoming more transparent and open to the marketplace. There was quite a number of them signed last year, but equally it's a product which is competing against what was quite an attractive CFD auction this week, as an example. So it's naturally a product which is complex to sell, complex to understand, has a lot of legalities to it, but does protect corporates, Jeff, to your point around that sort of long-term risk.
Okay, we've got loads of questions flooding in, so if you don't mind, I'll carry on. And if you need to then go back to the slides there, or you need to use one of the slides, we'll go to those. This is from Tim. What is your target on-site consumption of solar versus how much would be acceptable to export back to the grid? So I'm assuming I'm going to say, okay, let's say someone's producing a megawatt and half a megawatt they want to use, and then they want to export the other. Is that something you look at, or are you trying to get the companies to actually utilize all of their PV on site?
Yeah, good to hear from you, Tim. I mean, look, ultimately, as I said earlier, we've got a design team that will fully analyze the base load, that will produce a design fit for purpose for those sites around 80 to 85% on-site consumption. There are multiple contract mechanisms. So, the pay-as-produce mechanism, which is effectively a take-or-pay, is a cheaper mechanism for the end customer, whereby they will receive that export and deal with the export as they see fit. Alternatively, we can look at an own consumption profile, which has a percentage for a minimum threshold, and we will take that sort of export exposure on that form of contract. Would you agree?
Yeah, absolutely.
I'm going to ask a question because I know that this is a bit of an issue, and you mentioned it yourself earlier, Jamie. DNO connections. One of the big things I always hear is that the biggest obstacle for doing any of this is the DNO, and we work with a couple of DNOs, and I know the pressures they're under. So, can you explore around that, just what your feelings and some of the stuff you're coming up against?
Well, I think the first thing to say, Jeff, is that a lot of the behind-the-meter assets that we're working with are relatively small in scale compared to grid-scale projects. So it was a good news story for us where the statement of works was increased to 5 megawatts, which effectively then means that if we've got a behind-the-meter asset up to 5 megawatts, we're able to develop that asset with the DNOs locally rather than having to go up to grid. So the main constraint for us was the statement of work. contracts, and that would be for any project, including grid scale projects. So NESO and NGET have had a big reform late last year. The Gate 2 requirements sort of, put a blocker on quite a lot of the grid scale elements of projects. But actually, on the behind the meter assets up to around, 5 MVA, for example, we can now work with the DNOs to get those away. And if you look at the DNOs and what the DNOs are able to offer us is that they're able to look at that locally rather than they're able to provide us with, the opportunity for upgrades, which naturally there always will be. And as we slide down the scale to a megawatt, maybe a sub 1 megawatt, quite often, there may be a free connection cost or a relatively limited connection offer, which fundamentally, promotes the installation of behind the meter PV and promotes those sort of, 100 kilowatts up to a megawatt type projects, and they can all progress relatively quickly. But got anything to add?
No, not really, to be honest with you.
Okay. Why don't actually Ben's asked another question. Are you engaged with the potential opportunity of church roof, for example? So relevant to my previous question, i.e. east-west orientated roofs with significant nationwide PV generation potential, but without significant on-site demand. Okay, I understand the church thing. It gets used on a Saturday and a Sunday, but it may not be used during the week. Thought process. Thoughts on that?
So yeah, I mean, so as a financial, as a way of delivering power to neighbours, yes, potentially. It's could be complex. Often churches, unless they're embedded in the sort of the urban or very suburban environment, I think that does present some challenges. But yes, absolutely, where you can maximise a route where consumption is comparatively low, you could sell to neighbours. But yeah, we're not doing a huge amount of that, but it's not something that we would necessarily say no to.
Yeah, okay. I mean, it is to an extent, most churches are normally owned by the church or whichever church they are. So makes it easier from the tenancy point of view. But like you said, then in terms of being able to use, is there an argument for things like batteries, or are we too soon into battery technology?
I think what might be relevant here is if you look at football or sports stadia in the same context, got good experience with football clubs and things like that. So fundamentally, when you're looking at peaky demand, so maybe 2 games a week, churches, maybe a couple of times a week where it's really busy. The honest answer is that the economics of a battery to really make that happen and work is pretty remote, and that's not to say that we wouldn't look at it, Jeff. We're more than capable of designing PV and battery and providing what that would look like as a co-locate. So the answer is never no. The answer is let's have a look at it. If anyone's got any questions after this, we're more than happy to pick that up, and we're happy to sort of run with any of those inquiries and do some work with them.
Yeah, I think this is beginning to make me realise that this audience really understands quite a lot of this, but they're really going to throw you some tough questions. So I'm glad you two are here rather than just me dealing with it. And actually, Tim from before, from supplying a landlord, I mean, we talked about tenants as well, actually, and I think you might have picked up on it, Miles, or maybe it was you, Jamie, that Iceland, they don't necessarily own all of the buildings that you've been putting onto, so they must have some agreement with their landlord. From supplying a landlord, are they able to resell that power onto tenants? So I suppose from a landlord point of view, they may want to take more charge. Can we just explore that sort of tenants and landlords issue, because that will come up when looking at this?
Yeah. So look, from our perspective, our end customer is the PPA off-taker.
Right.
That PPA off-taker can be a tenant or a landlord. The mechanism to work with landlords, there are multiple options, whether you work with them from a property point of view, on a re-gear, on a solar rental or a lease option. They're all viable and credible solutions that we collectively work with the likes of CBRE, IM, and others to be able to perform that as their landlord obligations on behalf of their tenants. Equally, when we are selling to that landlord, if they've got, for example, a shopping centre with sub-metering, which I think is Tim's point, that would be between the landlords and the tenant obligation, and it wouldn't be anything to do with us, because it's fundamentally important that we sell to our PPA off-taker, and how they then manage their arrangements thereafter is well.
Yeah, okay. So actually, if there are a bunch of tenants that want their landlord to move, they could suggest that this might be a way forward for the landlord, and actually might, the landlord can get a piece of the action as well. That sounds very monetary, but you know what I mean.
Yeah.
Yeah, yeah. Can see two commercial people. Yeah, absolutely. There's money in it for everybody. Right. Okay. Now Ed has sent in a good question. And I know that, I think Ed, if I remember rightly, looks after lots of car showrooms. So again, potential.
Yeah.
There seems to be an increased scrutiny from insurers with regards perceived risks, mainly around fire. What assurances are given to them about systems operation and maintenance to satisfy their requirements? Good question, Ed. Thank you.
No, it is, and important for the subject. Importantly, we've worked with a number of car dealerships, and actually, I sit on an insurance panel with Zurich, Aviva, Legal and General. There's guidance documentation classified as RC62, which deals with fire risk and how we manage that fire risk. And over the last couple of years, I'd suggest we've really come over the hurdles that the insurers are fundamentally worried about. And we've managed to introduce sort of, varying types of protections into both the cabling and the PV technology in order to satisfy those insurance requirements. And I think it's important to address that sort of phenomenon of it's in the too hard to do box because my insurer doesn't like it. We've got a full brochure which will address all of the queries related to any insurer's, concerns. And we're also able to sort of speak to any brokers or any end insurers and underwriters to make sure that we can satisfy those requirements. And I'd like to think, given the portfolios of projects that we've got on screen and the portfolios between us that we operate, we've pretty much touched a lot of the underwriters in the UK, and I don't think we've failed to satisfy them at all today.
I'm going to ask a very rude question. Okay, so in the last 5 years, has any PV system, and it might not be one of your systems, ever been a fire?
Absolutely not. I will say something just to overlay that though, and I never knew this until we went. We were dealing with a waste contractor at one point, and their insurer used to insure them to allow fires because effectively they were dealing with plastics waste, and the way that the building actually was structured, it was all a fully enclosed structure contained, exactly. And if it started, it allowed to be in flames. So actually, that's probably one of the only PV projects which we didn't get away because it was effectively allowed to go on fire. And it was really, really interesting dealing with, they were specialists in combustion product and material handling service. So it was really, we got into the weeds, and from my perspective, I'm solutions driven, and I thought we could overcome it. And when I got told it was just able to burn effectively, it was crazy. But going back to sitting there, and the question there is, we deal with car showrooms, car dealerships, auto body repairs, and various automotive businesses on a daily basis, and we have no issues from an insurer perspective.
By the way, that was a brilliant anecdote, and thank God we went down this format of much more sort of questions and answers, because we'd have never have had that otherwise. So thank you, I enjoyed that. Okay, we're getting into some nitty gritty. Okay, so you'll enjoy. This is from Sean. Sean, thank you for your question. So, from a market benchmarking perspective, what pence per kilowatt hour range are you currently offering? You may not want to answer all of this. Currently offering under a third-party funded model, and how does this vary depending on covenant strength, system size, and contracted? Wow, there's a. You might be here for 5-10 minutes.
Yeah, I mean, I could strip back our financial model on this call, but I can't do that for various reasons. Not least, there are some competitors actually on the call. So, all I would say, Sean, is come and have a chat with us. It's entirely model based, and I think we probably just come back to the savings piece really and say typically, most customers will be saving between 30 and 50 and sometimes more % on the consumed energy from one of our systems. I think that's probably the simplest way to answer the question without giving too much away commercially. No. But Sean, we'd be very happy to run you through some of those models, and indeed
anybody else that's on the call where that might be relevant, we'd be very happy to run through those models on an open book basis with you.
Yeah, I mean, that's a difficult question because obviously this is going to be on demand afterwards. So I don't want you giving away any of your crown jewels. But frankly, if you're an end user that's going to use the system, you would expect to make cost savings. I know there's capital outlay if you want to do the capital outlay, but obviously you're talking about fully funded, so you're actually not having to do that outlay. But thank you, Sean, and I'm sure Sean will be in touch. Sean's just said thank you and understood. Right, brilliant. Thank you. That's very kind of you. I do love the interactivity of today. So look, we've actually got a little.
That's great. I love these questions.
Yeah, no, they're brilliant questions. Actually, I'm going to ask a stupid. Come on, now to ask a stupid question. I always ask the dumb questions.
No such question as a stupid one.
Yeah. Okay, thank you, chaps. In terms of the look, solar's been around for a while now. But in terms of the UK, what is the percentage of if you think of we could have 100% solar coverage based on the buildings and land or whatever, what percentage are we at? I mean, are we at 50%? We're at 10%. Where do you think and it might be only a rough answer, but just, and then why, if it's not as big as I think, why are people holding back, would you say?
I think it's a good question. I think it's a bit arbitrary in terms of the market data sets, Jeff. We're not going to start quoting references, but last year, mid 2025, we got access to some market data, particularly from a property perspective. And rooftop PV was tracking around 7 or 8% of the overall sort of square footage in the UK. So you're talking sub 10% of roofs which are currently in use.
Yeah, so it depends on how you measure it. Roofs that are capable of taking solar, those sorts of things. So they're difficult stats,
yes,
quite honestly. But speaking to some of the issues, I think a lot of that comes back to perception of complexity. And I think until relatively recently, the perception has been that delivering solar is complicated. Now, solar is a comparatively straightforward technology, but it's the contractual relationships that people see as creating complications that don't necessarily need to be there. I think working with good developers and flexible funders means that you can make those things feel much easier for a big corporate that wants to deliver across their estate. We want to demystify things. We want to do things much, much faster. So for us, working hard on a portfolio, that speed and that intensity of delivery is absolutely critical to our business model.
Okay, so and you touched on there, contractual.
Yeah.
I mean, obviously, a PPA, there's going to be a whole load of legalese and there's a whole bunch of pages. Does that mean that you need some expensive lawyers that are going to go through it? Sort of talk me through that whole legal process that you need to go through.
Sure.
Probably
do a bit of double act.
Yeah. I love the way there's that. Right, I don't really want to answer that.
But the honest answer is yes, absolutely. We want our clients to protect their position and get the right advice when looking at PPA. So look, from our perspective, we have our own legal counsel. We will provide draft documentation, and therefore it's often a light touch markup of what is acceptable, palatable, or otherwise. The fundamentals here are there are two primary documents. One of them is the power purchase agreement, which is a power contract in effect, which is going to deliver you a certain amount of kilowatt hours against what your overall usage is, to around 25%, just using that as a parameter for now, of your overall demand. The second contract is a property contract, which allows us the privilege of being able to retain access onto your roof and be able to have that lease contract, which will last for the term of the PPA. So the lease is a protection for the PPA. And the reason is, Jeff, if I just sort of conclude with the principles of the document, if we are providing £1 million plus worth of kit and equipment, which is going to deliver you significant savings and also meet potentially ESG commitments you otherwise wouldn't have been able to achieve without this solution, we just are asking for the privilege under the lease to retain permissions and everything else during the length of the power purchase agreement to stay on site. And that lease protects our capital deployed. So whilst it's a zero capex solution, the two documents work hand in hand, just effectively to protect our position and our capital.
And okay, so we talked about terms. From your point of view, is there a minimum term for the PPA?
Well, it's good question. It's price sensitive, obviously. So we will tend to price PPAs from 10 years up to, sky's the limit in some circumstances, but we've certainly looked at 30 and 35-year tenor of those contracts. And obviously, the longer the PPA, actually, the cheaper the headline that first year PPA price is going to be.
Okay, good question from Duncan again. Your slides mentioned solar can be transferred on expiry of contract. Wow, he's been looking at the slides. If better tech is available then, and I don't want to do it, do you take it away or offer to repower? I think I've asked that question. I think I've asked that question correctly.
Yeah, so that's a repowering and recontracting question, really. So very happy to repower if the customer wants to recontract with us for a longer period of time. Typically PV will continue to operate well beyond the PPA contract term. So those customers at the point of transfer are going to get a system which, if it's been well looked after, which it will have been, that PV system could continue to operate for quite a few more years to come, effectively costing them very little, other than paying somebody to operate it. And I would urge all customers to look at how they're operating their systems, even if they've installed them themselves under a capex contract.
What actually, in terms of obviously PV and the technology behind PV and solar panels has moved on. So if someone's installed it, or if someone's going to use their roof and you're going to put some panels on there, are we looking at a lifetime of 25 years, 15 years? What sort of lifetime are we looking at?
Most of our viewpoint on that is between 30 and 40 years. I mean, we contract our solar farms, for example, Jeff, to 40 years. And that's primarily because that is the optical sort of view of how that looks. The degradation factors and the replacement parts, which will be critical during the lifetime, are all considered at the front end. But there's nothing to suggest that PV won't last that long. And it's fundamentally, what I often say is, it's fundamentally important as an asset owner. We are deploying capital into a PV system, which gives us one chance of retaining our discounted cash flow for, say, a 25-year term, right? So we are laser focused to get the PV operational, performing both for the customer and ourselves to achieve our business plan and our commitments to the customer. And I think that's really fundamental in terms of what we're looking to achieve. And if I think I just come to Ed's question for a second.
Yeah,
I always refer back to King's Cross on this point, because with King's Cross, they had Savills Energy, they had a Bureau in Optimized Energy, they had more consultants than I care to dream about, right? And with large businesses, particularly, like a Sitner Group or similar, you are focused on trying to get the cheapest power. You do often hedge your position, you do often forward procure. And all of these things need to be considered in the round. And what I would say is as a developer of PPAs, both corporate PPAs and behind the meter assets, we work with the energy teams on both sides, and we will look at the volumes, we will look at what tolerances are built in, we'll look at deployment at what periods of time. Often a hedge position is 12 or 18 months ahead. It might not work for the first 12 months, but that doesn't negate us looking at that opportunity to be ready for that 12 or 18 month cutoff. I first spoke to King's Cross in 2021. We did the PPA in 2025. We're here to support as a partner for the longer term. We're not here to sort of install solar and move on. And we know that the innovation of assets, whether that be PV, battery, whatever may come in the future, that fundamentally we want to be on that innovation wave and continue to support our clients and customers as we move forward. So I think that in conclusion around the King's Cross, or even to Ed's point, It's that we just need to look at the detail. We need to look at where it's at. And actually, funny enough, when King's Cross sort of looked at their position, they were able to have a bit of upside by selling their hedge position early, because of the procurement and the way that the power's moved in the market since then. So everything's different. The point is, we're here. We're very experienced at all things in terms of energy and the supply of energy and the forward procurement. And we also work quite heavily with TPIs like, energy brokers and bureaus and consultancy advisory businesses, because we support them fundamentally in what they do.
Yeah, I mean, it's interesting because obviously I've been working in this market for a long time now, and unless you're a very, very large corporate, you tend to be utilizing an energy consultant, and therefore for you as a company or you as companies, there's almost a pathway through to those end users via the brokers. So you're used to working with various different partners, not just the end user.
Absolutely, yeah. And what I was coming on to there, Jeff, the amount of times we've spoken to energy brokers throughout 2021, 22, it's you're taking dinner off our table. We're an energy broker. You're reducing our kilowatt hours we can get from our customer. Now, those same energy brokers, having not offered a renewable solution, are losing business because actually corporates need to decarbonize, and they need that option as an energy broker to say, okay, well, we can find you cheap power, whether that be green, brown, or otherwise. But actually, we've got this partner who we can wheel in, and we can do behind the meter assets, and we can look at everything in the round, and you might get 75% of relatively stable, cheap power pricing, as well as, a solution from Shawton Energy, which would deliver you pricing at 50% of the cost price of the retail power over there. And it's a really important point that the market shifted over the last 3 or 4 years, particularly. Energy brokers, TPIs, were quite adverse to this. But actually what we want to say is that we want to join forces, and we want to work hand in glove with them, not to take dinner off the table, but actually to offer a service that maybe the end customer needs or wants.
And create an incentive for you to come and talk to us, to free up your thinking about how you might get paid for these sorts of things. So you guys, that's how you thrive on introducer fees. Ultimately, we can be very flexible about how those are paid.
Okay,
it's all brass tacks.
Yeah, no, absolutely. I mean, look, I've worked with TPIs for a long time, and they're not charities. So that and what you're saying is you understand they're not charities, and there are ways of helping one another. That's good. Okay, so Ben's come back with a nice curveball, and he even apologizes, and he thinks the answer will be no, but I'll ask the question. Does a PPA contract across multiple independent businesses, linked only by the fact that they are located on the same industrial site, have any potential? I'm assuming from a risk point of view, it's going to be a no, isn't it?
No, it's a yes.
So yeah, I'm sorry, I take that back. I'm not listening.
So you're probably expecting me to say that. I think so. You're probably going to go about this in a couple of different ways. We come back to the landlord question. So is the landlord going to come and sign a PPA with us, or are we going to have multiple PPAs with those individual occupiers on that site? Either way, there's usually a commercial structure we can agree that works.
Oh, okay, I like that. I mean, because obviously there'll be, there could be sort of smaller manufacturers or warehouse businesses or whatever that are thinking that they can't partake. I mean, we talked about the 7-8% of rooftop space, and I don't know what that is in business, but maybe there are companies that are thinking, oh, we won't do this because it's not. We're probably not big enough. So what you're saying is it is possible. There may be some complexity, but it is possible.
The size could be a restriction. So Ben unfortunately didn't mention about scale here, but provided that the individual system sizes are sufficient to support a PPA, then absolutely we'd love to have a conversation.
Okay, look, I'm mindful. God, this is absolutely flown by. Can I just say, right? So we've got 10 minutes basically, and there's probably a couple of points that you would like to get across, and I'll come on to that. If anyone's got any more questions, please get them in. But we will be beginning to stop in about 5 minutes or less. What would be useful, I think, is I know you've got the slide up about funding options, PPA versus CapEx. So it might be a quick whiz through of that, and then really. Miles and Jamie, it'd be worth you sort of maybe 2 or 3 points that are really worth putting out there to let people know why fully funded should be looked at.
Yeah, I think the funding options is critical actually, and no more so that we aren't looking to try and get businesses who are cash rich and able to spend their own money. Fundamentally, we want to make that acutely clear. However, there are often other opportunities for businesses to invest in kit and equipment, whereby our PPA offer can still allow them to invest in their business and not have to invest in the renewables. And the point being is, we are here to provide a funding solution that sits alongside that business for zero capex. But I just wanted to make it clear that, if businesses can get their own capex, that we're not trying to twist anyone's arm here, and that we understand that is another pretty viable option. Would you agree?
Absolutely. And there might be other things that those customers are worried about. It might be, oh, well, our roof isn't suitable. We need to replace our roof. Well, actually, we can wrap quite a lot of those things into our PPOs, which is often forgotten. Yeah. So if a customer needs to do an over roof, or they need to completely re-roof, or there's some work that needs doing, they need a new BMS system, they want some EV chargers, all those sorts of things, we can wrap that into a PPM. So it's a way potentially of funding other things that those customers need. So that's often forgotten. It's something we haven't touched on today.
Yeah. So that whole refurbishment, the whole sort of being able to look at other possibilities around energy efficiency and ESG related opportunities can also be put into there as well.
Absolutely right.
I've got a good question before you go on to your process. So thank you, Manisha. What challenges are you facing with the public sector when trying to install a PPA? Should we say the government?
Should we challenge the CCS, PQQ and onboarding process? So one straight back to you is that you've got a very complex onboarding process, especially for flexible businesses like ourselves as we grow. And as we sort of, show our capability in a private sector, the CCS does actually negate a lot of businesses such as ours to even get on their supply list. So where the big 6, big 7 can get on there because they've got big solar farm assets, which most of those assets are just selling into, their energy supply. What my challenge back to the CCS is I don't think that the onboarding criteria allows us to be able to provide behind the meter solutions, given the scale that they expect a lot of their customers who are getting onboarded. But coming back to the question, Jeff, is that we are really focusing around public sector. We spend a lot of time in from a Shawton Energy point of view in LCR, Liverpool City Region, and Greater Manchester Combined Authority. We do an awful lot of training. We do a lot of apprenticeships. We do a lot of webinars and speaking, both around finance and the opportunity for ESG. And what we find from a public sector perspective is that the compliance and the governance is very difficult to overcome. So you might have officers in council who really want to sort of, deliver the ESG commitments, which are being forced upon them through government, that then the compliance procurement officers aren't able to sign off on that. So then you look at frameworks, and I think it's important to touch on frameworks similar to sort of CCS, but we've been awarded the Lot 5 framework from Laser last year. Laser allows us an avenue into compliance and governance alongside things like YPO and multiple others. But the fundamentals are, if we look at our portfolio and pipeline, if we look at the numbers of universities, colleges, trusts, and you talk, I've done webinars with the HMT, with the education department, just to try and bridge the gaps between actually, they don't have finance, we have access to plenty of capital, we also have the solution, but the procurement route is always the challenge. And I think that's the conclusion in the public sector is that we are primed and ready to support the public sector, but we do need someone within the public sector, namely the CCS, to actually understand that the better providers in the sector and achieving 100 megawatt plus portfolios in the private sector just aren't able to get into the public sector domain.
Right, Manisha's come back. I am looking at the CCS energy strategy. I'd love to have 30 minutes. Oh, there you go. You've got an open door, Jamie. You have an open door.
Absolute pleasure.
Can I just say that this webinar is working really well? I'm going to big myself up here. Thank you, Manisha. That's very good of you. I'm not going to take any more questions because we've got 5 minutes, and I'm going to give Jamie and Miles an opportunity just to wrap it up. So why don't you wrap it up for us? Because I think this has been fantastic, by the way, really brilliant. But if you can wrap it up, and then that, because I'm sure there'll be certain things you just want to get across.
Yeah, I think if we just strip everything we've said back, Jeff, because I'm not certain on the demographic of the audience, but effectively to allow us to install a PV asset on behind the meter project, we need energy data, being half-hourly data, etc. We then need to analyze the property elements. We need to go through grid. We need to go through planning. And we need to go through the legal process. I think we've touched on most of that, but really important that we refer back to our process document on screen, just so that everyone's aware of, if anyone does want to start the journey, it's on screen now as to what we're required to be able to do that. Secondly, I think it's really important to touch on what Miles said. The amount of projects, we've got a construction business. We do an awful lot of structural upgrades, roof repairs, new roofs, roof overclad systems, etc. We're competent at it. We've been doing it for 15 years and more. So the reality is we complement the PPA in quite many ways when we talk about, upgrading property. And then we come on to products. We talk about EV, voltage optimization, carports. I don't think we spoke about
no,
before.
We haven't, but yeah, very, very topical.
But if you look at like our ability to deliver a very strong PPA price on carports now, given the synergies of the engineering and the synergies of the cost of capital and the deployment of what Ampere can offer, I think it's really important for everyone to understand that PV is a rooftop PV and behind the meter assets is our topical point of conversation. But there are plenty of other conversations to have thereafter. And we'd like to just sort of let everyone know that we believe that with both of our skill sets, we are very flexible, versatile, and here to help.
Yeah, flexibility piece is absolutely key, Jamie, isn't it? And I think there's been a tendency for people to say, "Oh, this just goes into the too difficult box for us."
Yeah.
Actually, let us take that difficulty or that perceived difficulty and make it easy. Ultimately, we have as a team all been doing this for a very, very long time. There is not a real estate problem that we haven't seen. There isn't an engineering problem that we haven't seen. And very few of them are completely insurmountable. Yeah, often there's a cost that sits behind it, but if you want to do something, generally speaking, we can find a way to do that, and we can find that way quickly. So speed and flexibility, absolutely everything. And I think if there are two messages there, it's probably those two things.
That's brilliant. Right. Okay. I am going to say a big thank you to you, Miles. Big thank you to you, Jamie. All of their details are on the screen now, so please feel free to get in touch with them. I'm sure they'll be getting in touch with some of you anyway, and I'll definitely make sure you're getting in touch with Manisha. Just to say, could you please rate the webinar, just to let us know that we're doing the right thing. Thank you so much for all your questions. Please do not forget that if you want to meet the one and only Jamie Shaw, he will be at the he will be
at your autograph book.
Yeah, it is the only one. Look, he named the company after himself. It has to be the one and only. And we've actually had thanks, guys, from a couple of people already, so that's very kind.
You're very welcome.
Yeah, and the Big Zero Show, so bigzeroshow.com. If you're an end user, you can attend for free. You can meet the one and only. Hopefully, I'll see if I can get Miles to come along. They're a great double act. I've really enjoyed today. It's absolutely flown. I'm going to say goodbye, chaps. Why don't you say goodbye?
Goodbye, everyone.
Goodbye, and thank you very much for all your time. Cheers.